In this video lesson, I will cover the topic that says, do I need 1000 pips to get rich? A quick answer for you is not necessary. 1000 pips is very high amount, but you will see that is 1000 pips as a number is not so important. There's something else that is very important in trading. I will cover this topic because I already have written an article here on the getnotrading.com website where you can read all the details, and I will go through this article step by step, and I will try to explain to you what I have meant under that. On the right side I have a trading chart with currently it is gold on the 1 hour time frame. If it is necessary, I will open a trade just to show you an example. But let's go start with the article. You can see this is the content where I will explain to you what means compounding money with 1000 pips. Do you need 1000 pips or less? And what kind of lot sizes there is. So what is the lot size and how does it impact on a number of pips? Then you have aggressive approach, which I will show you what is one of the ways how to become to be successful by using the number of pips. Then you have human emotions that are already present in you when you are trading, and what to do with 1000 pips, aggressive trading account. Now let's start from the beginning. Compounding is a way where you add previous results to the current account balance, and you add more and more as you move forward. Now here you can see that here is a table which tells you where you start with a certain amount in a number of years. Now you can see here I have used a percentage 6 to 7%, and there is a goal to double the account each year. So 6 to 7% per month, and that means 12 months in a year. On a 1000 account it's not very hard. If you have a trading system that works for you, 6 to 7% can be done in 1 or 2, 3 trades if you have a proper risk management. Now, how many trades per day you will take or per month depends on you, but there is a way if you are profitable and the trading system is working, 6 to 7% per month is doable. You need to find the trade with several pips per week to fulfill the monthly goal. With small amount of pips you can earn a lot. Now here it is the table. So in 10 years you could have 1,024,000. Now you can see that this compounding calculator shows you that you can become millionaire in 10 years depending on what is your starting account balance. Well, it's not very easy. This is just simple an example where it is not visible what is behind the trading system and also what is necessary to do during the month. Now, this looks very easy, but the idea, get rich quick, it's not very easy. And it is always not very good to have in your mind to get rich quick. Some traders become rich very quickly, but those are very low number of traders. Now, do I need 1000 pips or less? Well, the number of pips is very close connected with the value of a pip. So for example, if 1 pip is equal to $10 and you have created and you have make 1000 pips per month, 1000 pips multiplied with 10 will give you $10,000. So it is a simple math, but do you need 1000 pips to get rich? It is possible. If you increase the value of 1 pip, instead of $10, it can be $100. So you can also, with 1000 pips, create $100,000 of profit. It is possible, but is it very easy to create 1000 pips in profit per month, or there is another way with less number of pips? Now let's see an example. I will use $10 as a profit per month just for calculation. Then to reach 10% on a $1000 account, you need to earn $100. If you have 1% of risk, that is $10 on your initial balance. So if you open one trade, for example here on the chart, if I open a new order and I click sell by the market, this trade should not have, let's say for example, let's modify this order, let's put this one like this, and let's move this stop loss here to around 1. I have currently $8,000, so 1% should be around $80. So you can see here the stop loss on this trade should not be more than 1%, and that means 1% of my account balance, which is $8,000. So this will be $80. So currently here I have profit of minus 84. That means my stop loss is set to minus 84, around 1% of my account balance. Now, you need to earn $100 with maximum loss of $10 per month. To divide that goal into 4 weeks, you need to earn 2.5% per week with 1% of risk. That is 1 against 2.5 risk to reward ratio, which is quite good. And this is one of the standards that I follow. 1 loss compared to 2 or 3 trades in $1 or $2.5 in profit. So if I risk $1 per one trade, in the next trade, when the trade is profitable, I could earn 2 or 3%, $2 or $3. To get 2.5%, which is $25, you need to earn a few pips. How much pips you will need? It is defined by the loss the lot size you will use. Now here it is an example with a min lot size where 1 pip is equal to $1. Then you need 25 pips, because 25 pips multiplied with $1 will give you $25. If you use micro lot size, where 1 pip is equal to 0.1, then you need 250 pips. To fit into 1000 pips, none of the lot size is correct. If you make calculation with mini lot size, where you need 25 pips per week, you will need 100 pips per month to reach the monthly goal. If you have 1000 pips as a goal, to get rich, you will have 10 months until you reach the 1000 pips, because 10 months multiplied with 100 pips per month gives you 1000 pips. Now, there is another way to increase the lot size. So that means when 1 pip is equal to $1, you can increase that to $10. Now, you need to change something to reach the goal with 1000 pips. You have only one option, and that is to use larger lot size, and that is standard lot, where 1 pip is equal to $10. In the Euro USD, in this pair, when the price moves by 1 pip, this will be equal to $10. Now, you can see that there is only one way. You cannot change 1000 pips, because this is the topic which says, do I need 1000 pips to get rich? So in order to earn lots of money, you need to have 1000 pips. So this is something that we cannot change. We leave 1000 pips. What we can change is the standard lot, which means a lot size. When you open new order, I will close this one. When you open new order, this is the lot size where you define the value of a pip. When it is volume equal to 1, that means 1 standard lot. Now let's get back here. If you use 1 standard lot with 1% of risk and 2.5% of profit per week, then you can see what you will get. Each week you need to get 2.5 pips to reach the goal, but the biggest problem here is 1% of risk. Now what happens? For example here. So if the price change, I can change this one to points. If the price changed here to 2.5 pips, and that means 25, I need to see here the number 25, this will be the profit. But 1% of risk will be 1 pip, which means here should be only 10. So there is a high probability that the price will go up for 1 pip, and it will activate my stop loss, and then maybe return back down. So this means this 1 pip is too narrow. It's very close to the open price. I need to have a free space for the price to go up and down. You can see how the price goes up and down, up and down. So one pip as a stop loss is not very good. It will not be possible to trade, because you cannot predict that the price will immediately go down when you open a new trade. It's not possible. It's because the price jumps always around. It's not a straight line that the price goes down. You can see how the price goes up and down, up and down. So you need to have a free space for the price, and that means several pips for the price, so the price can jump around. And that means, for example, let's check this one. For example, you open the trade right here, and let's see how much of the pip. Take a look here. It is the number 10. You can see in the middle it says 10. That means 1 pip. You can see that the price has gone up 1.7 pips and then go down. So you can see how much of the pip you should allow for the price to jump around. Now here it is. If you open the trade, the spread, which is from 1 to 2 pips, will eat your percent. You will not be able to open that trade. To overcome this problem, you can increase the risk from 1% up to 10 to 20%, which is not advisable. It is always good to have a very low number of percentage per risk on each trade. Now, there is aggressive approach, which is possible. I will not get into much details, but I will show you these results. 4 weeks multiplied with 2.5 pips per week gives you 10 pips per month. The whole month needs 10 pips and the whole year needs 120 pips. Now you can see what you get here. In 12 months to reach 1000 pips with 120 pips per year, you need around 8 years to be rich. It will be not very easy in 8 years to earn only 960 pips, because 960 pips is very easy to earn on very high volatile pair, for example gold against US dollar. Is it reachable? Yes, it is. You are hunting only 2.5 pips per each trade, but have in mind that if you have one losing trade, you would end up losing $200 as a loss, which is high amount of money. So it's not very good to lose so much money on $1,000 of your account. If you lose $200 on 1,000 account, it will be very hard to just get back to $1,000, which is initial balance. Well, this means that the math above is not correct, because you would not have any more $1,000 on your account. It's very risky. It's best to risk 1 to 2% per trade, so you do not lose so much amount of money off on your trade. Now, what is human emotions? You can see that 1000 pips are not reachable with good risk management, but many traders would go with risky approach, even they could lose 20% on one trade. The humans are greedy in all aspects of their lives. They want money right now if possible, and if it's not possible, they will try to make that possible. In Forex, remember, when the greed comes, you will lose everything. The greed will force you to open more trades, to risk more amount of money on your one trade instead of risking only 1%. The greed eventually will bring your trading account balance to zero. So being greedy is not the way to go. Being patient, being disciplined is the way to go, and to become a consistent Forex trader. Now, what to do with 1000 pips? Now, if you want to succeed and become rich in trading, use the approach with 6 to 7% profit per month, as I have explained in the table at the beginning. The way is reachable, and you are very well protected from losing your account. That means if you lose only 1% of your account balance, you can simply lose 10 trades in a row and you will lose only 10%, which is doable to return that with several profitable trades. Now, with 6 to 7% of profit per month, you'll have a steady income each month, and if you have losing trade, you will not lose too much. You will not lose your nerves because of the losing trades, and you will be you will be calm, and you will be patient and disciplined. Now, if you deposit more money each month, you will reach your goal sooner, because if you are able to increase $1,000 on your account balance to $10,000, you will speed up the process of making lots of money much more quickly. So this is something, what is one of the way how you can use 1000 pips to become rich. Having higher account balance will allow you to reach with 6 to 7% of profit per month. It will not be $600 or $700. Sorry, $6 or $7 on $1,000 account. It will be around 60, 70 or $600 or $700 per month of profit if you have a bigger trading account. Now, as an aggressive trading account, you can open another account on which you can try more aggressive trading approach. On this account, you can increase the lot size where the pip will be valued more. You can increase the risk percentage and the reward percentage. Do follow some risk management. Do not allow to trade without any risk, and also stop loss on any trades. So just to protect your account. Well, as a conclusion, is it 1000 pips enough to get rich? It is possible, but it would be very good to have a higher account balance in order to achieve your success easily. If you have $1,000 on your account with 1,000 pips as a goal, it will be not very easy because you will risk too much on each trade that you open. So this will be very aggressive, and it is not also advisable. This is something it is that you need to check on your own. Use a demo account first to see how this goes. Make some kind of calculations here on the paper to see how this will go, how it will look, and what is the good percentage. Is it 6 to 7% doable? Is it okay for you? Do you feel okay with that? If not, change something that will make you feel good so you can follow this trading system on your own. You can also experiment with lot size so you can see what is the value of 1 pip on each here the symbol you are trading. Currently I have on the Euro USD, but you can also test with several symbols, for example on the gold, how this looks. I hope this has explained, is it possible to have 1,000 pips with a goal to become rich? If you have any questions, feel free to leave a comment. I will try to answer as soon as possible. If you like this video, click the like button and subscribe, share with other traders, and see you next time, and happy trading.